Well, good afternoon, everyone. Welcome back to the channel. So we're going to continue the portfolio review series with another subscriber's portfolio that was submitted to me. So let's go look at it, and we'll look up each fund, and then we'll give the portfolio a grade. A lot of these funds I have actually haven't heard of. So let's all learn together here. So this is the portfolio that was submitted a couple of weeks ago in my Discord. Total value is almost $1 million. Very impressive. So it appears in the retirement account, which I'm assuming is a 401k. This person invests similar to how the coach does, with majority in index funds that are in a 401k account, I would assume, and then in a brokerage account for the rest. So this person has, it looks like, three mutual funds or index funds. He's got FWTKX, 54,000, FXAIX, almost 800,000 in one fund. That's incredible. And then FXNAX, 23,000. And then you see the price and the number of shares. So that's the bulk of this person's net worth, according to this, unless there's other stuff outside of this, like real estate and whatnot. And then the brokerage account has some SFOL, one of our favorites, FAGIX, almost 15,000, FFRHX, 10,511, AGNC, almost 13,000, AMZY, which is a yield max fund. So this person does have yield max, 3,254, MSFO, the Microsoft one, 10,519, Tesla, almost 8,000, and then AGGH almost sounds like the pirate R, um, 8664. That might be cash or something. Oh, here we go right here. So pension lump sum is 236,000. So this person's over $1 million in net worth, 600,000 in real estate. So I need to change the title. Actually, this is more like a $1.7 million portfolio. We've got the 925,508 here, 600,000 there, plus 230. What did he say? 236. Yeah, good memory, huh, coach? Wow. So the total value is actually almost 18, excuse me, 1.8 million. All right. So that is very, very impressive. Very impressive. So now, so we've got some really astute people in the audience. I got to give the audience credit. Okay. Let's start off looking these up. First one we're going to look up is FW, FWT. Oh, I wish I could remember this. I was just saying how good my memory was. Let me go back over here, line up the screens. Okay, so we're going to look up FWTKX. This is the Fidelity Freedom 2035 fund. I like Fidelity funds. I'm actually in them myself. So this portfolio is probably going to get a grade of an A from me. Welcome, Denny Keaton. Oh, welcome, Dissector. Good to see you both on. Yeah, this is an impressive one for sure. We've definitely got some astute people in the audience here. By the way, I do have Seeking Alpha. I need to start adding that link, but I have the Seeking Alpha Premium. There's an affiliate link too if you all want a discount on your Seeking Alpha. I'm going to start adding that into the videos. Now let's share this one. Okay, Fidelity Freedom 2035 Fund, 1492. 1492, the year Columbus sailed the ocean blue, right? It's funny how you watch these, like, they go around randomly surveying people and they're like, hey, what year did Columbus sail? And they're like 1975. And they say it with such certainty. It's funny. Anyway, sidetrack there. So this one, since 2018, looks like it's only been around since then. We've stayed pretty much flat. We've got a slight dividend, 1.94%. By 2021, we were actually up to almost $18 a share. So this one has some room to come back. Let's look at the holdings of this one real quick. Invest in a combination of Fidelity U.S. equity funds, international equity funds, bond funds, and short-term funds. The advisor allocates its assets according to a neutral asset allocation strategy shown in the glide path below that adjusts over time until it reaches an allocation similar to that of Fidelity Freedom Income Fund, 10 to 19 years after the year. Okay, so that's what that one is. What I'm anxious to see, and I'm sure you all are anxious to see too, is the big one, the one that he's got like half of his net worth in. So this is FXAIX. So here we go. I'm eager to see this one. I'm assuming this is going to be a big, fat, large cap fund. This one is the Fidelity 500 Index Fund. and I would assume he's done really well in this one. He didn't show me like a gain and loss, so maybe we can follow up and get that. Oh yeah, this one has been a gem for sure since 2011. Yeah, I bet he's made a fortune in this one. So this has gone from where it was in 2011, 47.76 to 176.93. So that's a gain of $129.17 off the initial 47.76. That's like a 300% gain. So that is phenomenal. Of course, I'm doing all that math in my head here, not I'm using the phone down here. Um, Let me look. It's so much easier to type these in on the iPhone. FXAIX to get the exact percentage. I guess these were all created. Yeah, I was right, 277%. I guess these were all created like 10 to 12 years ago. So there's that one. This is, I'm assuming, like an S&P 500 or something. Normally invests 80% of its assets in common stocks, including the S&P 500, which broadly represents the performance of common stocks publicly traded in the US. It lends securities to earn income. So yeah, that one has definitely kicked butt. It's got a Morningstar rating of 5 stars, above average for risk rating. Give that one an A plus for sure. And then what is our next one? Next one up is FXNAX. So see, here's the thing. Like they talk about how Warren Buffett hates diversification. That's why, because with one fund, this person has generated a huge return, and they've got the bulk of their investable net worth in one fund, and it's done great. And the whole thing about diversification, because this is basically an S&P 500 fund, this is a fund of funds essentially. Okay, now our next one on the docket here is FXNAX. Let's see, FXNAX. This is a bond fund. I'm not too big of a fan of bonds because interest rates for the last, up to the last like 2 years, we were at historic lows. So bonds weren't doing as well, but now they're starting to do better. This one has been flat. So this is a secure holding. It's been dropping. This is weird being a bond fund. It's been dropping since 2020. It's dropped almost, well, $2.50 almost. So that one's not too exciting, but that's got to be, a stable one that pays out a 3% yield. So there's those three. That must be his 401k. Then he's got a pension on top of it. Funny thing, my old company paid out a pension too, and then they phased it out. So they started giving you the 3% pay credits into the 401k. So we were getting 5% into the 401k and matching originally, and then we got another 3% on top of the 5%. So that became 8% into the 401k. So I may end up regretting leaving that job after a while, but I did get, like a 50% raise at my new one. But we'll see how long this new one lasts. If anything ever happens, if I get like, laid off or something, I am going to become a full-time YouTuber. I'm at that point where I'm comfortable enough to be, well, not just a full-time YouTuber, but a full-time like day trader, investor slash YouTuber. That's been the goal. That's been the dream for a while, to be a full-time coach. And you all that are my viewers can certainly help me with that by watching, by spreading the word, by joining the Discord, by being loyal fans. You all can certainly help the coach, and that's always much appreciated. Okay, next one. Now we're into the brokerage account. So we're going to look up SVOL. Simplified volatility. This is one that I certainly regret getting out of. I got out of it to buy Tesla, of all things. A dumb move on my part. Although, so Tesla is graded an F on Charles Schwab, which, depending on perspective, because life's all about perspective, right? F could stand for fantastic, or it could stand for failure. But nonetheless, the grade is a letter grade of F. So, me personally, I do regret getting out of SVOL to buy more Tesla, not to piss off anybody that's a Yield Max, hardcore fan. Um, but me personally, I feel like I made a dumb move because I went from a stable dividend, 17% paying annually, with a stable NAV to something that appears less stable. Okay. Now this one was at $23 a share. It's come down a little bit. It bottomed October 27th. I call that the Halloween lows. 21.51. The dividend did get cut a little bit, but overall, it's stable, and as you all know, I would rather have a stable dividend, or excuse me, I would rather have a stable NAV and a lower dividend than a higher dividend and a less stable NAV. So the dividend went down from 32 cents per share to 30 cents in July, and then it came back up by 1 cent in December, and then it's been 30 cents in January. So we should be getting the dividend announcement next Monday, which also is the announcement for the Tesla, not the announcement, but the actual reverse split. So we're going to have half of our shares. The thief in the night will come and take half of our shares, but we're getting, hey, I can't complain. We're getting our $18 share price again. But how ironic. Who would have thought it would have come that way? Okay, the next one, FAGIX. Let's look at that one. FAGIX. These portfolios really inspire me because I hope they inspire all of you all, because this could be, especially for the younger crowd, this could be where you are in the next 20 or 30 years. Certainly inspires me. Okay. So this one has been around since the 80s. It's stayed pretty stable. You see some fluctuations. It pays a 5% yield. Fidelity Capital and Income. So this is a classic income and capital, best of both worlds, right? 5% is not too bad, but we were up to 1134. We've dropped from there, but overall there has not been a lot of NAV erosion like we've seen with other ones. So that one, I'd give that one like a solid B. And then FFRHX. Let's see how we're doing on time here. You all are quiet today. Any other comments on the portfolio while we're going over it? Okay, so the next one is, let's see. We've got 10,000 in FFRHX. FFRHX. So this is a Fidelity floating rate high income. So being high income, it's got to be, yeah, 8.3%. Now this one has been around since 2000. Not a ton of fluctuation except for the big crash in '08. You see we've stayed relatively flat. Morningstar rates it above average, 5 stars, so that's good. Okay, next one, we've got AGNC, and then the rest of it is YieldMax funds. So this person, he's only got, of his total net worth, he's probably got like 2% or less in YieldMax. And this is what I say, if you're going to be a YieldMax investor, you want something like this. You don't want the bulk of your net worth in YieldMax. So he's got 22,000 out of an 18, or I keep saying 18, $1.8 million portfolio. So that's like 1.2%. That's like what I keep in cash of my whole net worth. I keep like less than 2% in cash. So that's what he's got in YieldMax. So not too bad. It's speculative. Um, so yeah, you can't go wrong with that. All right, AGNC is our next one, and then we've got 3 YieldMax funds. AGNC. So this is AGNC Investment Core. This one has been around since '09, it appears, or '08. How about that? One that went public right before the crash. This one, let's see, 2012, we peaked out at 33.61, fell from there. This one, it's been declining over time. Not terrible though. I'd probably give this one like a C plus because it's declined since 2021. And then our next ones are the Amazon, Microsoft, and Tesla. So we got to look those up. So he's got 903 shares in Tesla, soon to be. Do the math on that. 451, and I think you lose the fractional share, and that just becomes cash. That reminds me, I got to look at how many fractional shares I'm going to lose when I look at mine. Okay, the cash portion we're going to ignore. We'll look at AMZY, MSFO, and Tesla real quick. So these will be quick because these are the ones we talk about regularly. Don't you like that? How it's like the smaller percentage of the portfolio is the ones that they're the ones that we talk about the most. Of course, there's no mistaking it. Those get the most views. And I don't say that in a cynical way. It's just true. That's why a lot of these YouTubers are covering them. This is not, I mean, I would say if you really believe that yield max, ooh, I got to be careful saying this. How do I want to word this? Let me say this. All the YouTubers that are dedicated solely to yield max and if they really believe, first of all, I don't really believe anyone on here legitimately believes that yield max alone is going to make them wealthy. I'll say that. I may get some pushback for that, but truly don't believe, including myself. I wouldn't put all my net worth into this. Now, some of these funds are doing great. Coney is doing great. SQY had a great day yesterday. Um, if YieldMax does end up making you rich, good for you. That's all I can say. Good for you. But I feel like a lot of people on here don't legit believe that they're going to get rich off of YieldMax, even if they say they do. A lot of it is for views, I would have to say. So, and at least I'm honest about that. Anyway, after that rant, the AMZN, AMZY, this one has been doing pretty well, actually. Just, after that little, not trashing Yield Max, but just stating the facts. But this one is doing good. You're up in this one if you look at it since inception. And obviously, it pays out a really solid dividend too. So we all know the dividends there, so we're not going to go over those. MSFO is the Microsoft one. Let's see if I got any comments for what I just said. Chuck Stank got to the party late this time. Yeah, we were waiting for you to arrive here. The party can't start without you. Anyway, I just made a comment that I may regret later about yield max investing. But at least I speak the truth. So let's see. Okay, so the Microsoft one, what time is it? How long have I been going? Okay, not too bad. The Microsoft one, let's see where we are. We are up in this one as well. We're up slightly, so can't really complain about these. These are doing pretty well. I think the timing, just Tesla and OARK, which I don't hear anyone talk about OARK anymore. By the way, did that one like go bankrupt or something? I never hear anyone talk about it. And it's trading higher than Tesla, but yet no one talks about it anymore. Is this like the forgotten one? Look, it's still got a 48% yield. Anybody think OARK is going to come back? Anyway, this guy's not in OARK, so we're not going to focus on that. So Tesla is soon to double in value, right? Not really, because it's reverse splitting. It'll be 1808 come Monday. So Tesla, of course, I'll just go by what Schwab rates it. Schwab rates it an F, but can't really grade any. There's not too much weighting for this portfolio when it comes to, oh, Chuck agrees with me, so we're good. As long as Chuck agrees with me, we're good, right? Forget it if the other thousands of people on here that love YieldMax disagree. Anyway, I'll always speak the truth on here. All right, now let's go back to the portfolio screen. And okay, so he's got, of his whole net worth, which is actually 1.8 million, very impressive. Half of it is in a pension and real estate. So the real estate portion, which may be like one or two houses, of course, in this market, 600,000 may be one house if he's in a really expensive state. So 600,000 divided by 18 or 1.8 million. I like the pie chart like the one I did with mine. So he's got a third of his net worth in real estate. The pension would represent 13% of his net worth, and then half of his net worth is invested. Over half of it, 50, like 52% to be exact. So overall, I think he's doing a great job. I think honestly, people like this should run YouTube channels. Although the boring investing typically doesn't get that many views unless you are entertaining about it, which I try to be. So anyway, let's see. Oh, OARK. OARK will come back if rates get cut. Why do rates getting cut have anything to do with OARK's performance? Of course, I honestly don't know one way or another what a fund like OARK is going to do, but thankfully I'm in possession of advanced financial forecasting equipment, such as the Magic 8 Ball, that can help me determine what funds are going to do. So, will OARK come back? Let's see. We'll know the exact answer very soon. Oh, come on. It says cannot predict now. It's not supposed to give me answers like that. It's supposed to be advanced. It gave me the same answer twice. Unbelievable. All right, if it gives me the same answer three times, I'm playing lotto or doing call options. They're kind of like one and the same if you hit them right. Signs point to yes. There you go. Signs point to it recovering. I just don't know what the interest rates going lower. Oh, are you saying like what I've been saying? Because you're saying if rates get cut, the whole market's going to come back. That might be what you're saying. Anyway, well, that was a fun one, you guys. Really enjoyed that one. Uh, hey, I can't disagree with you. Sometimes I trust the eight ball more than my own thoughts too. If I could just fix my own, believe it or not, as an investor, I get in my own way a lot. I just showed you all in the options video I did yesterday how well uh, some options in Nvidia would have done. You would have made like $500,000. There was like a $1 million Amazon trade. I can't blame myself for the one in 2020 because I didn't know options as well, or I really didn't know them at all in 2020, even though I had a class on it in college, which is strange how that works. Well, I guess I did know what they were. I just my brain kind of shut off. But after seeing the money that was being made on options, then it started clicking. So by last year, there's no excuse really for missing the one I did last year. But what happens, I chalk it up to getting in the way of myself. I overthink things, I second guess myself, and somehow I've got to stop doing that. Maybe, just maybe the advanced equipment will help me. It'll help me to go from space cadet status to advanced investor status. Anyway, that was fun, you all. Submit more portfolios. I won't say your name. You notice I do them anonymously. So take care. See you all very soon. Have a great rest of your day.